Hi, I'm Jason Choy, Senior Portfolio Manager at InvestNow, and welcome to today's special webinar, Practical Investment Strategies to Navigate Market Volatility. 2025 has certainly been a wild ride for investors, dominated by headlines of market volatility through Trump administration tariffs and investor sentiment that has been eroding. But market volatility doesn't necessarily mean you have to deviate significantly from your long-term investment strategy. And today I'm joined by Anna Scott, CEO of Smart, New Zealand's first and largest issuer of exchange-traded funds in New Zealand, who will share with us some practical strategies to navigate this volatility and in particular discuss how ETFs can help investors build a robust investment portfolio that can ride out any waves and help them achieve their long-term investing goals.
That's the plan.
Great. Awesome. Anna, thanks for joining us today. So Anna, let's start with what's been happening in markets. So can you provide us a bit more context around some of the market volatility that's been dominating headlines recently?
I think you touched on some of that at the beginning as well. So obviously the geopolitical tensions, a new president in the White House, so a lot of rhetoric and statements about what that means. And generally that comes into, as I said, the geopolitical. This time though, there's extra because it's the trade, it's inflation, it's interest rates. So it's really put the whole world in turmoil in terms of knowing what does the future hold and what might that look like. And in general, the markets don't like uncertainty. And so when you get into that time where no one knows what the interest rate will look like in a future yield curve, then the markets get more volatile.
Yeah, and that's the nature of the game almost, right? And recent markets always have ups and downs.
Absolutely.
And this certainly isn't the first time investors experience this, and it certainly won't be the last. So what can investors actually do when they see their investment value go down like this?
Well, sometimes I think it helps to take a look at history. And that's, we always say in investment, right? Historical performance is no guide for future, but it does help when you're in the midst of that volatility to know where that positioned is in history. So when we look at what's happened in the first quarter of 2025 and you look at where levels are recently, if you look back to the end of 24, they're actually kind of where they were then.
Yes.
And no one was panicking at that point in time. It's just, it's been, as you said, the waves go up and down. So I think that sometimes helps just to look contextually, where are we sitting and how are you since when you first invested? But really what I think makes the most sense to investors is to really look ahead and know, what am I investing for?
Yes.
And so if you are investing for something that's very short term and you need that money in the next quarter, then you're going to inherently need to be a little more conservative in your portfolio because you don't want to be at the peak. Well, the peak would be good, but you don't want to be at the trough at the point that you need the money.
Right.
Whereas if you're doing this for retirement and you're really looking at your investment in another 5-10 years, then a little bit of that up and down in the wave is okay, as long as in general you're heading in the right direction for the long term.
Yep, that's right. And long term is the key, right? But
Yeah.
you want investors to really stay the course despite any volatility they may experience in the short term. And a good way to do that is by investing through a diversified portfolio, right?
Yeah.
Because if you have a diversified portfolio, you don't get exposed to the massive highs or the super low lows that investment markets can have, right? Could you kind of walk us through, the diversification was 101 and how the smart ETFs can really help provide some of that?
Sure. So how I like to think about it is it's all diversification is not having all your eggs in one basket, but it's also what are those baskets then you spread out. So the simplistic place to start is really there's a difference between equities and bonds. And we talk about that as equities are generally viewed as more of a growth type of investment in companies, notwithstanding there are companies who are more defensive, and bonds give you that defensive nature. Yep. So you want to have a little bit of a blend of both. And when you look at just those two over time, you can see equities generally have trended higher in terms of value, but way more peaks and troughs. Bonds will be a lower return, but a lot more stable. So the benefit of putting those two together is one smooths out the other a little. And that's the ultimate idea. So a lot of people talk about what will you do with a balanced portfolio. And that's normally about 60% in equities, 40% in bonds. You might be closer to 50-50, but that's the range. That's your first step in diversification. The second one is really to then get in underneath those and say, well, how do I look at that? So in an equity side of your portfolio, do you want to be picking single stocks? Well, that's quite challenging if you're a general everyday investor, because which couple, how many are you going to cover, how many of those will there be? So that's where we really like to use ETFs. And in your equity portfolio, you can have geographic So how much have I got in America versus New Zealand and Australia, or the rest of the emerging markets? And then you can get in underneath that to think about themes or sectors. So it might be robotics or technology or mining or infrastructure or property. But you'd start with, I think, of the geopolitical, so that kind of geography status. And that's what we've seen recently. So a lot of people love the US 500. Great market, right? Well diversified in that market in terms of the types of sectors and themes of companies. So people have liked to buy that entire market. And when you buy the US 500 ETF, that's what you're doing. You don't have to say, did I own NVIDIA or not? You just know that you're covering the market. And therefore, when that general market rises, so do you.
So the key thing there is with ETFs, you aren't necessarily investing to a single stock, you're investing into effectively a basket of securities, right?
Absolutely.
So could you kind of walk us through a bit more about ETFs? How do they practically work, right? Almost a 101 on this, what are the benefits of some ETFs that you guys...
So ETF stands for Exchange Traded Fund.
Yes.
And you'll know in New Zealand we have a lot of what we would call unlisted funds as well. These ones are exchange traded, which means they're listed on the NZX. So yes, it's a basket of stocks. Yes. There are some that are a bit more thematic, like we have a gold ETF. Well, that isn't a basket of gold, there's just gold, but it does provide you with an exchange traded fund that tracks the price of gold. So most of them are, as you said, a basket of stocks. So when it says the ASX 200, that means it is trying to track all 200 stocks in the ASX market. And our job as the fund manager is to make sure that we're tracking that index. So we have to hold in our fund a bit of all 200, and we have to hold those 200 stocks in the same weighting as they are weighted in the ASX 200 weighting. So the ones that are of highest value we'll hold more of, the ones that are lowest we hold less of. And our job is to track that on a monthly basis and well, daily, but we do rebalances to make sure that we're giving you that return. So we have the NZX 50, we also have an NZX 20, you have the ASX 200, the US 500, but we also have Europe, which has a selection of European exchanges, or the emerging markets, which is a popular one now with what's going on in America. So our job is to have those whole basket and give you the same return as that market.
And because you're tracking the market, or for the most part, when your ETFs, I know you have some active ones as well, because you're tracking it for the most part, that means you can kind of keep costs low within the ETF range. And also because they're structured as New Zealand PI funds, there's also a tax efficiency element as well.
There is. And so that's what we like for investors in New Zealand to say they're all listed here on the New Zealand Exchange. They're all in New Zealand dollars. So you don't have to worry about currency conversion or anything else. They're all PI structure. And so you can do that unlisted as well. But if you're going to go offshore to New Zealand, you don't get the New Zealand PI tax efficiency.
Yes.
So lots of people find that if they can just buy everything local, then that means they're not worried about whether they've got something on an American exchange and they have to worry about fifth tax rates or anything complicated. It's just nice and simple here. It's all in New Zealand dollars. It's all in the same tax structure, which makes your tax reporting that much easier. And they're all listed here, which means you can buy and sell them online during the day while the New Zealand market's open.
Yeah, perfect. And we won't go into super detail in terms of tax, so it can get very complicated. But the high level thing to know for investors is if you are buying the same, let's say US 500 or S&P 500 ETF offshore, then you get subject to fifth tax, which is charged at a marginal tax rate up to 39%, whereas if you use a smart ETF, just that 28% is the cap tax rate, right? Which is 11% may not seem like a massive amount, but over time, that's where the benefit of compounding and saving on fees and tax can really show your investment.
Absolutely can. And it's the same as some of our ETFs as well will offer a dividend. So when you talk about compounding, then those are also ETFs. If they have a dividend, that means you can reinvest that again. And so then you're starting to lower your average cost of investing every time you buy more of that particular ETF, and it evens it out over time. So that's also another great attraction about some of these funds.
Great. I want to talk about timing a little bit, because you mentioned these ETFs are exchange traded, so you're available to trade daily whenever the New Zealand Stock Exchange is open. Does that mean kind of investors should be trying to time the market and buy and sell at favorable prices? Or, what are your thoughts on how investors should be timing the market?
For your long-term investing, and it's a common chat line, I guess now, is that you shouldn't worry about timing the market. You should really just worry about time in the market. So we say it's far more important to start, even whether it's just a very small amount every week, and then regularly add to that over time. But also when it does get volatile especially, keep in mind that end end game and stay invested for the long term. And I think that when ETFs launched in New Zealand, they probably were attractive to people who wanted to trade them at the beginning. But now we're really seeing the change in that. So this latest period of volatility, rather than seeing a lot of sells, we are seeing people who are buying more, or we're seeing that they are buying other things in terms of trying to diversify. So that constant trading of in and out and thinking that I'm selling and buying to try and make a quick dollar, that's starting to phase out, I think.
Yes. Yeah, well, at InvestNow, we certainly don't encourage investors to try and trade or time the market either. We're very much proponents of long-term investors like Smart as well. But we certainly do see kind of evolving trends or behaviors amongst investors. So, for example, probably during the COVID time, we saw a bit more investors that were...
Yeah, a lot of sell down.
That's right. That's right. Especially over the initial COVID period where markets tanked a bit. Unfortunately for those investors, all they ended up really doing is locking in losses and missing out on the subsequent market recovery. Whereas this time around, I think investors have really learned their lesson. A lot of the investors, similar to you guys, were seeing is less sales and just more buying the dip, if anything.
Yes,
they are doing
exactly. If you're able to, that's what people... And because that's... When you're set with your diversification in your portfolio, then you're sure that you've got enough spread of what those market changes will be. And if you're sure enough about that, then you don't need to sell down. You just have segments of it that you'd like to. As you said, you could buy the dip, or you just regularly are buying in the same amounts, making sure that you're keeping the same asset allocation and that diversification nicely spread.
Absolutely. So, Anna, if investors wanted to get access to the Smart ETFs, where can they get access to it?
So all our information is on our website, Smart Invest, and there's a lot of information about each of those ETFs. We try and categorise them into geographies, but themes as well, to give you an idea of what you're looking for as you're looking to do that. You can access them via a number of intermediary platforms. You can do it via your broker. So anywhere that you can trade an actual company security in New Zealand, you can trade these as well. But you can also do it direct with registry and via Smart.
Or via InvestNow, sorry. Cool. And final question, if you have 3 kind of practical tips for investors to navigate this market volatility, what would you say they are?
I think we've touched on some of those, but to summarise them, I think it is long-term. So always have that long-term view of what you're saving for and what you're heading towards, and try and stay the course. The second one is that it is important around the time that you're in the market. So even if you're thinking about it today and just starting your investment journey, do start, because the earlier you start, the better those compounding returns are over the long term. And the third one I'd say is, if you're not sure, then just ask. There's a lot of information on Smart Invest. There's a lot of investor information at InvestNow and other places. And the more people that start to be involved in seeking some information, like listening to this webinar or taking a read and then asking some questions, it's a good time to ask, because there's a lot of information and help out there.
Awesome. Thank you so much for your time and insights today, Anna. Hopefully investors out there have got some great insight from a seasoned investment expert like Anna Scott over here. And if you want to learn more about the Smart ETFs, do check out smartinvest.co.nz or the Smart landing page on InvestNow. Thanks once again, everyone, for your time today. Catch you in the next webinar. Cheers.